China bans Bitcoin. The expected impact of this was that since China had a huge Bitcoin mining industry, the ban was expected to cripple Bitcoin's network. But guess what? Bitcoin loves chaos. Businesses were getting shut down, people were getting locked in their homes. I remember the markets crashing at the time, and everyone was basically thinking that the world was going to come to a complete halt. And it basically did. They thought these capital controls would force people away from what they thought was risky assets like Bitcoin. My lesson to you is stand back. I'm Matthew Fraser, and this is Crypto Collective. After making millions with Amazon and e-commerce, I realized that if I was starting again today, crypto would be my first choice. I'm here to help you take your first steps and build real wealth. Ready to set yourself up for life? Let's go. And in this episode, we're going to be breaking down the 9 major events in Bitcoin history where the world thought it was going to collapse and it didn't. So the first major event happened in 2013, and this was the Cyprus banking crisis. Now what happened was Cyprus announced a bail-in policy, and it started freezing and seizing customer bank deposits to bail out, could you guess? The banks, of course. They started bailing out the banks. Now what happened was capital controls would force people away from what was considered at the time risky assets like Bitcoin. Now, can you guess what the expected impact was? They thought these capital controls would force people away from what they thought was risky assets like Bitcoin. But what actually happened? Well, Bitcoin became a safe haven as people from Cyprus and others rushed into Bitcoin to protect their wealth. Now, Bitcoin price soared from just $45 to over $200. Michael Saylor famously says that Bitcoin loves chaos. And in this particular situation, it was very chaotic. And so people put their money into Bitcoin to protect their wealth. So the next major event happened in 2017. And this was China bans Bitcoin. And I must just say, for the first time, now China banned initial coin offerings, which are commonly called ICOs, and ordered, which I would say with their iron fist, local exchanges to shut down. Now, the expected impact of this was that since China had a huge Bitcoin mining industry, the ban was expected to cripple Bitcoin's network. But guess what? Bitcoin's network is global, right? So not one country controls Bitcoin. Not America, not China, although a lot of transactions happen in the US, but Asia has a lot of transactions too, right? And so not one nation state, not one entity, not one company, right, can control the Bitcoin network. And that's why people love it, because it is decentralized. So what ultimately happened in China? Well, the price dropped from $4,000 to $3,000, but within 3 months, Bitcoin then went on to hit an all-time high of $20,000. Could you imagine? Imagine those days when Bitcoin was at $20,000. What a dream. So this just goes to show, even the communist government of China thought that they could control with their iron fist and cripple the Bitcoin industry. And guess what? It didn't work. It just sent the price up. Now let's get to the event that no one, unfortunately, can ever forget, and that is the COVID Scandemic. And this Scandemic initially caused a sharp market downturn, and this was around early 2020. Now, I remember this specifically because, as you can remember, businesses were getting shut down, people were getting locked in their homes. I remember the markets crashing at the time, and everyone was basically thinking that the world was going to come to a complete halt, and it basically did. What happened was this led to one of the fastest recoveries, though, in the stock market in history. So the Dow Jones gained 6.6%, the S&P 500 gained 15.6%, and the NASDAQ was up 43.7% by the end of 2020. Incredible. So despite the initial shock, the cryptocurrency market demonstrated remarkable resistance and growth. Now, with Bitcoin's price rising by, wait for it, 700%. Now, this was from March 2020 to March 2021. And the overall crypto market capitalization surging from 191 billion to January 2020 to 769 billion. So despite the initial shock of COVID on the entire globe, the cryptocurrency market demonstrated remarkable resilience and growth, with Bitcoin's price rising by 700% from March 2020 to March 2021. And the overall crypto market capitalization surging from 191 billion in January 2020 to 769 billion by December 2020. Now, this indicates an increased investor interest in cryptocurrencies and potential safe havens during the pandemic uncertainty. I lived through this. Now, what's interesting though is I was not in the market during this period. In fact, I was in an online business. And what happened during that time is online business, I was in Amazon and Shopify, went through the freaking roof. And my sales just went crazy, right? I made millions and millions and millions of dollars. So although that period was really, really bad for some, and I do feel for all those small businesses that got shut down, on the flip side, I had an online business where I made millions and millions of dollars. And I'm now using those millions of dollars, rotated the profits, and now I've rotated them into Bitcoin. So guys, this is just another reminder that Bitcoin loves chaos. When the markets do crash, ultimately, because of things like the Scandemic or other things, that is actually the time. If you've got money sitting on the sidelines, that's when you want to put money in, right? When everyone is bleeding and people are thinking the world is going to end, that's when you want to start buying. And that's how you will ultimately create generational wealth very, very fast. Okay, guys, let's roll into 2021 now. What happens then? China bans Bitcoin again, right? China loves banning Bitcoin multiple times. So what happened was China banned Bitcoin mining, forcing miners to shut down and relocate. But of course, Bitcoin mining makes up part of the Bitcoin mining network. And as I mentioned before, not one country, not one nation state, not one government or company controls not just Bitcoin network, but also Bitcoin mining. The expected impact that China thought was going to happen was that Bitcoin's hash rate, which was how much computing power they have to help mine Bitcoin, they thought it would plummet. And they thought it was going to destroy the network security and confidence and ultimately kill Bitcoin altogether. But what happened? Well, China didn't realize that there's other people that also mine and help secure the network around the globe. So Bitcoin initially dropped, but miners moved to new locations like the US and Kazakhstan, and the network recovered within months, which then saw the price go up even further. All right, let's talk about Terra Luna. Terra Luna was all the rage of the time, and it was a blockchain protocol that used algorithmic stablecoins, with Luna as its native token and UST as its stablecoin pegged to the dollar. Basically, it was a big mess. And in May of 2022, Terra's ecosystem collapsed when UST lost its dollar peg, right? So UST was a stablecoin which is pegged to the US dollar, 1-for-1. Now it detached from that. It was no longer 1-for-1. Now this caused Luna to hyperinflate and lose 99.98% of its value within days, wiping out nearly $45 billion of market capitalization. Now, despite the massive losses, this didn't crash the broader market because one, it was largely contained within the Terra ecosystem. Two, swift action by other platforms to distance themselves from Terra limited contagion. And three, the crypto market had already been experiencing a downturn, reducing the shock's impact on the overall sentiment. Now, I remember this time because Terra was all the rage, and it was around the time that I just got into the crypto market. I started buying Bitcoin and some other cryptocurrencies, but for some reason, I never bought Terra. There was just something about Terra that just didn't sound right to me. And so I didn't invest my money. And it was during a period where the market was, as I mentioned before, was on a downward trend, right? So it was after the 2021 high. I remember though, the day of the crash, it just all of a sudden there was a red candle and I thought, geez, what's going on here? But then I didn't know the market so well. I was a bit new and I thought, is this a buying opportunity? Is this crash a buying opportunity? Because of course, what you're thinking is you can now get Terra Luna at a bargain basement price So when it rebounds, you can make a lot of money. Now, I admit I didn't put all my money in, but I remember the number, $1,500. Yeah, it wasn't enough to break me, and it was a big time gamble. And I watched that $1,500 go in at 1,500, and within a matter of seconds, 1,400, 1,300, and then within about a day, it was all the way down to about $3 or something, right? And so that was a big lesson for me. And my lesson to you is stand back, right? Understand what else is happening in the marketplace. Do some research. Don't just watch your exchange, right? Watching the prices. Actually do some research outside the exchange to understand why that particular crypto is on a downward trajectory, because then you'll find out that it's actually more to it than just, hey, you're going to get it at a bargain basement price. In fact, you'd find out that that thing was never, ever going to recover and you couldn't get your money out quick enough. Hey, just quickly, if you're ready to dive deeper into crypto and Bitcoin and build real wealth, join my free crypto collective community. It's where I share exclusive insights and strategies and live discussions to help you succeed, whether you're a beginner or scaling your portfolio. Click on the link in the description and join us today. Now back to the episode. All right, let's talk about FTX. For most people who are in the crypto space, they will remember this very well because it is so recent. Now, FTX was a major cryptocurrency exchange founded by Sam Bankman-Fried. Isn't he famous now? SBF. Now, he was offering advanced trading options like derivatives, futures, and leveraged tokens, and was once valued at $32 billion. So in November of 2022, FTX collapsed after revelations of mishandling of funds between FTX and Alameda Research, which was also basically owned by them, triggered mass withdrawals. People couldn't get their money out fast enough. Now, this was exposing them to an $8 billion hole in FTX's accounts, leading to bankruptcy. And ultimately what happened was criminal charges were laid against Sam Bankman-Fried. So the FTX collapse did not crash the broader financial market because its impact was largely contained within the cryptocurrency sector. And this was due to the limited exposure of systemic market participants and the relatively small size of the crypto market compared to the traditional finance market. Now, I was around when this happened too. Now, funny enough, I also didn't have any FTX, but I'd learnt my lesson from Terra when the FTX price was collapsing, because you could buy crypto share in FTX. And when the crypto price was plummeting, I'd learnt my lesson from Terra I didn't just start rushing and thinking, oh, I can just get a bargain. No, I was very much aware now of keeping abreast of all of the news that was happening in the crypto space. So I knew when this thing started to collapse, it wasn't collapsing because now it was, or I thought I was going to get some sort of a bargain price. It was collapsing because of fraud and deception within that company. Now, you got to remember what was happening at that stage. So many people lost money, like a lot of people, to billions of dollars, okay? And it was a trick because on face value, you could see FTX, it was plastered, the FTX branding was plastered on stadiums. It was on even the Mercedes-Benz Formula One car. Now, if you're following Formula One like me, you would just think, hey, it's on the Formula One car, it must be a credible company. And of course, this was all just smoke and mirrors. They had done this deliberately to curry favor with obviously the broader market, to think that they were a legitimate company. And they were also donating millions and millions of dollars, mainly to the Democratic Party in the US, to curry favor against regulations that, I guess, prying eyes into their affairs, okay? So it's unfortunate that this happened. The takeaway for this, though, is something that I always talk about, which is do not hold your crypto on the exchange. So FTX was an exchange where you could buy Bitcoin, for example, and hold it with them. And that was a big mistake for so many people. And this should be a lesson to you now, even if you think that a particular exchange looks good at face value because they've got a great logo plastered all over a Formula One car, that doesn't mean that it could go under. let that be a lesson to you. So guys, if you want to learn more about crypto exchanges, I've got a specific episode about that, which you can find the link to it in the show notes. All right, and then we move on to another one which I lived through, which was in 2023, which was the Signature Bank collapse. Now, Signature Bank was one of the only banks in the US that was crypto friendly. And for many of us who are in Australia, crypto banks is something that is key to getting our money from our bank into crypto exchanges so we can buy things like Bitcoin and cryptocurrencies. So Signature Bank was the go-to of not just people who wanted to transfer money to exchanges, but also for people that owned cryptocurrency type businesses. So what was happening in America, if you owned a cryptocurrency business, let's say you were a consultant for cryptocurrency and the business name that you had was Cryptocurrency Consulting 20 USA, then you would want to go and set up a bank account, right, under that company name. And so a lot of the banks were simply rejecting you as an applicant. You couldn't open a bank account because you had the word crypto in your business name. That's what was happening. So Signature Bank was one of these very, very few banks that would allow business people to set up bank accounts with them. So the Signature Bank was one of these banks that served crypto clients, and they held $10 billion in crypto deposits by January 2021 and operating the Signet payment system for instant crypto transfers, which is exactly the type of things that we need right here in Australia. And I must say, I use some Australian banks and my transfers happen straight away. As we all know, living in Australia, we need banks in Australia to help or facilitate the transfers over to cryptocurrency exchanges. Now, if you jump into my community, absolutely free. Find the link in the description or the bio. You'll find I've got a list of banks who you should use, and we talk about these things daily in my private community of which banks are working the best and who to look out for. So back to Signature Bank. This bank was shut down by New York state regulators on March the 12th, 2023, due to a crisis of confidence in its leadership and concerns about its financial stability, marking the third largest commercial bank failure in US history. Now, while the Signature Bank collapse caused initial concern in the crypto industry, it did not lead to a broader market crash. So while the Signature Bank collapse caused initial concern in the crypto industry, it did not lead to a broader market crash because, one, the impact was largely contained within the crypto sector. Two, other banks and financial institutions were hesitant to take on crypto clients, so limiting the contagion. And three, the crypto market had already experienced significant volatility, reducing the shock's impact on overall sentiment. So this again, it was the bear market. So sentiment was fairly low. So there was, I guess, a floor price of where the market was going to go to. And I remember this period exactly because the price from memory was in the $20,000 mark. And I remember a friend of mine said, you know what, I've heard the price is going to drop down to like 3,000 US dollars. So I'm not going to buy. And I remember I said, my advice to you would be just to buy like dollar cost average in at these prices because these prices are so low. Eventually the price came down to about 16,000 US dollars. And my friend said, no, I still think it's going to drop to maybe $10,000. So I'm not going to buy. Now, meanwhile, I was buying all the time, like every week if I could at these prices. My friend kept waiting. And what ended up happening was the $10,000 and the $3,000 price that he thought was going to come never came. And then of course what happened is the market then reversed and it went back up again. But as it kept climbing up, he kept thinking, I'm going to wait because it's still going to drop. I'm going to wait, it's still going to drop. And it just kept going up and up and up. So he missed the price at 16,000 USD. He missed it at 20. He missed it at 25 and 30. And ultimately he had to suck it in and open up his wallet and buy it at about a $40,000 or $50,000 price point. Because by then it was just going up and it was not going to be returning back to a teens price ever again. So my lesson there is you must buy through the bear period. Don't think you're ever going to time the exact bottom because you'll never get the bottom. So in 2023, we then saw the US banking crisis. Now this involved the bank I just mentioned before, Signature Bank, but also involved Silvergate and SVB collapse. Now in this particular event, crypto-friendly banks like Silvergate, like Signature Bank, and Silicon Valley Bank all collapsed, causing an absolute market panic. Now, the expected impact on Bitcoin was that it would crash as banking access for crypto firms was completely cut off. But what happened? Well, Bitcoin then soared from $19,000 to over $28,000 within weeks as investors fled to Bitcoin as a safe haven asset. As I mentioned before, Bitcoin loves chaos. So let's bring it to more recent times, 2024. Now, the US Bitcoin ETF approval and regulatory battles was on. And the SEC, which is the Securities and Exchange Commission of USA, finally approved the spot Bitcoin ETF in early 2024. But lawsuits and government pressure was on crypto companies. So during this period, the Securities and Exchange Commission of USA finally approved the spot Bitcoin ETF. And I remember at the time, it was like a big moment. We all thought that Bitcoin was going to go absolutely parabolic at that time. And it kind of didn't. There was a little bit of a build up to that price point when the ETF was then approved, but then it kind of dropped off a bit. So it was kind of a bit flat, you would say. But what was happening behind the scenes though, despite this Bitcoin ETF, was that lawsuits and government pressure on crypto companies was still impacting the market. So there was still some uncertainty about what was going to happen there. So on the flip side though, true OG Bitcoiners thought that because of this Bitcoin ETF, it was now going to ruin the Bitcoin marketplace. Now, why did they think that? Well, they thought it was going to create more centralization within some of these big money makers, such as BlackRock, for example, one of the biggest money makers in the world. And they thought it was just going to completely kill the Bitcoin independence, which ultimately was why Bitcoin was established. It was established in the first place against big business. It was established against deflation of currency, against fiat currency. It was established to protect people and ultimately be a freedom money. So what ultimately happened though after this ETF was approved was that Bitcoin rallied to over $45,000. So I remember what happened at the time. I was thinking that this Bitcoin ETF was going to make Bitcoin go to the moon. And so did everybody else. So as the news came out, more and more people started buying Bitcoin thinking they were going to make bazillions of dollars. And ultimately, it landed flat once the Bitcoin ETF came to fruition. Now, ultimately, how do I see the Bitcoin ETF? I think ultimately, it's a good thing in the sense that it's freedom. I'm letting the market decide what they want to do. If people want to use a Bitcoin ETF, then so be it. But if people also want to use or hold Bitcoin themselves, that's also a good thing. Ultimately, it allowed people who couldn't necessarily invest in Bitcoin traditionally by buying Bitcoin. The ETF allowed an on-ramp for pension funds and other government institutions to have what they call a proxy exposure to Bitcoin. So let's move to now more recent times. And I say recent times as in the past couple of weeks. What we've seen is now Trump is now the president of the United States. Now he's come in saying that he's going to be the best president for crypto that ever existed. Of course, now crypto hasn't been around for that long. It's only been around for basically 16 years. But he is true to his word. Everything that he has said, he's going to do. But there's some other things that he is talking about which are causing some shocks within the marketplace. One of the things specifically, which only happened in recent days, was the announcement of proposed tariffs on Canada and Mexico. And once those proposed tariffs were announced, the market then went down. Now, I must admit, it was a bit of a shock to me, even though the crypto space knew that these tariffs were being proposed, because all through Trump's campaign, we knew this was coming if he was going to be elected. So he did get elected, and so the tariffs are now, being proposed. So what ended up happening though the other day was I saw some of my altcoins drop 30%. Now I've got to admit, I'm in the red on a lot of my altcoins anyway. My second biggest holding after Bitcoin is Solana. That's the only basically altcoin that is in the green because I've held it for so long. But so many of my other portfolio of altcoins are in the red. And then we saw this other 30% drop after this tariff talk, which ultimately didn't even come to fruition anyway, because he was using that as a leverage tool. But the market got super scared, they panicked, and they pulled out of it. What's the good news out of this though, is that Bitcoin held firm. We didn't see a big drop in the Bitcoin price. And I think ultimately, as I keep saying, Bitcoin loves chaos. So when you're thinking about what is the safe haven of cryptos as a whole, let's say people are going to put their money into Bitcoin. All right. So guys, that wraps up this episode. I hope you enjoyed going through all the different things that try to tank the Bitcoin market, but ultimately didn't. So let this be a lesson into the future. When you see things that are either tanking the market and the price does significantly drop, that is your time not to run away. That is not the time to sell. That is the time to buy and stack more Bitcoin. All right, guys, thanks so much and take care. Thanks for tuning in to Crypto Collective. If you've enjoyed this episode, the best way to show your support is to leave a 5-star review on Apple Podcast or Spotify, and make sure to subscribe to the YouTube channel so you don't miss an episode. You can also find more of me at I'm Matthew Fraser on all social media platforms.